There once was a stock that put to sea. The name of the stock was GME. The price blew up and the shorts dipped down. Hold my bully boys, hold. She had not been 2 weeks from shore when Ryan Cohen joined the board. The captain called all hands and swore he'd take his shares and hold. Soon may the Tenny Man come to send a rocket into the sun. One day when the trading is done, we'll take our gains and go. Soon may the Tenny Man come to send a rocket into the sun. One day when the trading is done, we'll take our gains and go. One day when the trading is done, we'll take our gains and go. Before the news had hit the market, Wall Street bets came up and bought it. With time in hands, they knew they'd profit if they could only hold. No deals were cut, no shorts were squeezed. The captain's mind was not on greed, but he belonged to the artist's creed. He took the risk to hold. Soon may the Tenny Man come to send a rocket into the sun. One day when the trading is done, we'll take our gains and go. Soon may the Tenny Man come to send a rocket into the sun. One day when the trading is done, we'll take our gains and go. For 40 days or even more, the stock went up then down once more. All gains were lost, it was looking poor, but still those traders did hold. As far as I've heard, the fight's still on, the short's not squeezed and the game's not won. The Tenny Man makes his regular call to encourage the captain, crew and all. Soon may the Tenny Man come to send a rocket into the sun. One day when the trading is done, we'll take our gains and go. Soon may the Tenny Man come to send a rocket into the sun. One day when the trading is done, we'll take our gains and go.
Going to the fucking moon. Going to the fucking moon. Going to the fucking moon. The fuck any, cause we're holding on for dear life, getting damn tandy so soon. Don't be mistaken, the apes won't be shaking or breaking. We're going to the fucking moon. One day, very soon, gonna wake up on the moon. Brand new yacht and a McDonald's in my living room. Bright yellow Lamborghini, 50-meter swimming pool. Champagne every day, ain't fam, what you do? Wanna hang, wanna chill? Oh, you got a mansion too? Oh, that's right, held on tight, jack titties every night. We was in way back when they tried to chop it down to 10. And just couldn't comprehend, apes were strong until the end. Now let's retell it, shit to tell, they be sweating. Had enough of these felons, but the apes we rebelling. Cause we never be selling, till we send it to heaven. Now we be out here yelling, hey, fuck you, Kenny. Bought my wife a minivan to share with the boyfriend, but I pull up in the Benz, plate saying Olive Crayons. Going on an airplane, don't think we'll be back again. Celebrating every day like a fucking birthday. Fuck Kenny, cause we're holding on for dear life, getting damn tangy so soon. Don't be mistaken, the apes won't be shaking or breaking. We're going to the fucking moon. Fuck Kenny, cause we're holding on for dear life, getting damn tangy so soon. Don't be mistaken, the apes won't be shaking or breaking. We're going to the fucking moon.
One small stone for me, one chance squeeze for me, cause
Today's expectation, probably more manipulation. FUD, a creation of a crooked operation. Bought more while it was low, got more dips than Trader Joe's. Oh, you thought that we'd let go, what the fuck you take us for? Holla if you spend your last dollar on bananas while living in squalor. We don't claim to be scholars, we the smooth brain dummies, and we never stood taller. Yeah, we do this for love and we do this for honor. Apollo 11 ain't got nothing on us. We the planet of the apes and in MOS we trust. MOASS, hell fucking yes. Gonna send it into space, go fire up the jets. Done my DD, call me Elton John, Rocket Man. This is the way, gonna be gorillionaires. Ground control to Major Tom, we about to have liftoff. Call us Neil Armstrong, gonna keep holding on. Fuck Kenny, cause we're holding on for dear life, getting damn tangy so soon. Don't be mistaken, the apes won't be shaking or breaking.
Alright, guys, I am on, and I just realized that Morantz is already on to. It's fine. You guys could watch it later. I'm gonna watch it later. In which case, I might just be off soon. Now there's not much here. Of course, I hope you enjoy the intro. Let's see. So, it's a lot to cover. I was gonna stay maybe an hour or so, but I might cut it a little bit shorter since Moran's gonna be on. Now, let's talk a little bit about sentiment, right? Of course, we know about the sentiment of this company. If you've been in this company for a long time, you would know how frustrating it is to have to hear that about the company, right? But I want to give you a little bit of hope here. Of course, like, we don't need it. We just need courage for people to admit that they're wrong about GameStop, right? The people upstairs. Okay, hold on. I have coffee here. But, so, the courage for these people to admit that they're wrong on GameStop, it's going to take a while for them to admit that. Because, again, you're in their territory when it comes to, tradings, buying into companies that you believe in. Hey, we have a brain. Each of us have a brain to know what we're getting into, right? So individual investor here. And of course, like, I play those hype songs and all that stuff. People are going to be like, you're pumping, and all that stuff. No, we're not pumping anything. We're just here to, support the company. And the company is doing pretty well. We've been, it's been a long journey, so to speak, right? It's a very long journey, and we wanted, to see the company succeed from decades on end here. We're not here just for a fly-by-night, and of course, like, yes, the songs might help people kind of realize what's going on here. Then this song has been 3 years ago, okay? And again, back then, we didn't learn anything about the market, the nature of the market. We just in our naivete, we thought that the market was supposed to be equal for everyone, right? Nobody should be tampering with the market, but we all know who has been tampering with the market. And so, the people that are controlling, the narrative, the sentiments, and all that stuff, I bet you anything they will be flipped at some point in the future, right? Now, I was just looking at one of the, let me see, hold on 1 second. This particular video, so this is going to be the meat and potato of this particular live stream, because I want to kind of show you the sentiment has been kind of changed slightly, just like what Morantz was saying all along, right? They're going to flip the script at some point. And here's the beginning of them starting to kind of like at least creating a little bit of like positivity. But even with the like a positivity, you could majority, like they frame it so that, GameStop is still struggling, right? So let me just play this one, and I'll stop in the middle of the video here because it's just, I was laughing the whole time. I was like, okay, all right. Okay, I'll point out in a minute here. Okay, hold on, let me see. Let me make sure this is not on too high. Might blow somebody's eardrums out. Okay.
It's time for Under 30. We're looking at GameStop ahead of their earnings on Tuesday of next week. So I'd like to welcome in George Tillis, Senior Markets Correspondent for the network. George, short interest in this name has fallen. So that's it. Hey, it's something. I know every time we talk about this name and I call it a meme stock, I get crucified. So I will acknowledge short interest has fallen, but it also has a profitability issue. I mean, there's fundamental flaws with this company ahead of its earnings.
Okay, right off the bat, they're saying short interest is falling. Last I checked, it's still high. Hold on, let me see. What am I? Why is it not on? Okay, sorry. Takes some time. I don't know why my, so she said short interest is falling. The last set I've heard, seen, is still the same. Look, I mean, it hasn't been falling. It's like, what? Maybe again, this is a 2-week-old data, perhaps? Hold on, let me see. Okay, hold on, you guys. So one of these things... No, this is not even game. GME, here we go. Boom, boom, boom. I'm trying to look for short interest falling. Like, no, it hasn't been falling. In fact, it's like added daily. Slowly, a small incremental addition to the short interest. So the fact that they are kind of like misleading investor or people out there. Again, like why? Why do you have to mislead people like that, right? But of course, hey, nobody's gonna hold them accountable for anything. I'm sure this beautiful lady over here, she's there for a reason. She's there for, just reporting on the news itself. I highly doubt she actually looked into the balance sheet herself, right? And really, look into it, make an analysis, because you cannot with a straight face saying that they are fundamentally flawed. It just makes no sense, right? Now, if you only look at one metric, that's what they're about to do in a minute here, then okay, yeah, I sure, revenue is down, but what? The sentiment here is that, actually, they still have a what did she say again? Sorry. Lost my train of thoughts.
Called a meme stock, I get crucified. So I will acknowledge short interest has fallen, but it also has a profitability issue. I mean, there's fundamental flaws with this company ahead of its earnings.
There are, Jenny, and that's the thing. There are still some profitability challenges for GameStop as a company, and there are really some sales challenges. But interesting enough, I'm not surprised to see the short interest start to fall, and I'll explain why in just a sec. But GameStop is still, of course, a core video game retailer, and we know that United States is about 65% of their total sales, in Europe and Australia and Canada is pretty much the remainder. But overall, the business itself seems to be stabilizing, at least from a financial standpoint. But the challenge still is what's going on with typical gaming. Gaming is now digital downloads. There's less demand for retailers like GameStop, but at the same time, they're still a very large company, and they are still generating sales. Now,
okay, so the problem is the sale, but they're still generating sales. You see, like they're speaking both sides of their mouth. But here's the thing: I could hear a hint of positivity, right? He said, "Well, they don't have the balance sheet issue anymore, right?" Okay, we'll take that. We'll take that and run with it. But of course, we know all that a year ago. Like we are not burning as much cash anymore, and so again, the first earning. Well, let me look at it over here, right? If you look at this one right here, look at this amazing, balance sheets, right? He's gonna mention the enterprise value in a minute, but let's look at the trailing 12 from here. So we've been cash flow positive for, fourth quarter in a row already, right? That's, again, this is the biggest milestone already. So we've been proving to them at least we're cash flow positive, right? This is the milestone that any one company would want to have, right? From losing money or negative free cash flow to positive free cash flow. That could have been the sentiment back then. Now they're just slowly inching you up to this sentiment. So this segment would have been correct if it was done a year ago. Are you hearing what I'm saying to you? So they want you to be a year later, then you should have been having that sentiment. So what is the sentiment right now? It should have been a better sentiment of like, hey, they're about to turn net positive. And this is another milestone that the news should have been, at least that's an honest, right? Well, in my opinion anyway. That would have been an honest thing to do, is to tell people, hey, they've been reaching this, they've been solving, actually, the thing that they think right now, or say that GameStop is having right now, the issue that she's pointing out in the previously before he jumped in, that they are challenged in the profitability, fundamentally challenged. No, they have not. You could see in the balance sheets yourself, right? So now, in my opinion, that segment right there, the one that I just showed you, would have been correct. That sentiment would have been correct a year ago. This year, the sentiment should have been a lot better. But I would take it. At least they're not like shitting on GameStop, saying that they're losing money left and right? And again, these news people want you to be late to the game, and you will. Here, let me continue to play the video. You will understand why in a minute.
They're going to be reporting next week, and the anticipated sales number is about $2 billion. Now, that's down considering last year at the same time, for the same quarter, it was about $2.23 billion, but at the same time, they're also estimated to grow their earnings to 25 cents versus 16 cents last year on an adjusted basis. But
okay, see, like, yes, but they're doing well. Yes, but estimating what is the estimated? He said 25 cents, so meaning that they are estimating that GameStop is earning 25 cents per share. But I thought we had that over here. Hold on, let me see if I could find it here. Okay, so the estimate for here, well, again, it could have been a different number that they're using. Perhaps NASDAQ versus trading views are different type of, estimate. So I don't know, again, like what sources estimate that they are using. But if you look at TradingView right now, the estimate is 29.5. So say 30 cents per share right there, right? So he said 25 cents per share that we're gonna, is going to make that much based on the estimation or expectation from Wall Street, so to speak, right? But if you look at the from previously year, hold on, I think this is the one last year. So from 16, hold on, beat estimate reported. So yeah, from 16 cents, that's what he said last year. So they've been improving since then. That's why I'm saying. From 16 cents now to now 25 cents. So that even the estimation shows improvement already. Does that make sense to me, to you guys? So the fact that the news is like covering that, but again, they move the goalposts again. It's like, okay, yes, they're able to do this, but this, right? So what is the but? The but is the fact that the revenue is down by 4%, which is true, yes. But again, gross income went up. So what is that? They didn't mention that at all.
You look at the stock, obviously this has been a huge multi-year story with the stock still, even in the last 5 years, higher by 400%, irrespective of the fact that it's down significantly from the meme hype, pinnacle that it had during that short squeeze event a few years back. But the company, at the end of the day, when you look at this as a retailer, they are expected to continue to show decelerating sales trends, and that's the fundamental problem with GameStop. So,
Okay, so there you go, right? Revenue's down, therefore bad company. Okay, all right. If that's the only metric that you're using, good luck, sir. Trying to evaluate any other company. in retail space, right? No wonder they have that sentiment. Like every single one person. Hi, Menu. Thank you for joining. Right? It's like everyone. It's like the same sentiment. How physical media is gone. Da da da. Right? Okay. Well, they could pivot. Like how many times do I have to show people? GameStop actually have a digital download as well, right? From everywhere, not just Steam. You could download from Origin. Whatever gaming plug-in that you love, you could download digitally. And on top of that, you could buy gift cards from them. Again, it's a one-stop shop for every single game platform that you have, and that's what the destination for gamers are. And this is the vision of Ryan Cohen. Oh, hey, he has a business, right? And it's not just the physical game that we're selling, as if like that's all we're selling. No, we have like hardware, softwares, and collectible, right? Those are the three main ones. And hold on. And I'm sure I'm preaching to the choir here, but there you go. Like eventually, I'm gonna be able to expand those more. And of course, software makes not even a third. And let's say a third. Just to say that they actually making that. Sorry, it's like a bigger portions of the pie over here. It fluctuates based on what game is being released, what game is more popular, and all of that stuff is gonna take into consideration. And the fact that they have the Twitter account, the fan base, the ability to, tweet out to the masses, right? To the fan, whether it's the investor themselves or the actual gamer who might want to try out this type of game or pre-order from GameStop, right? Now, if you hate GameStop so much, then don't pre-order it. Let other people do that, right? But to say that nobody shops there, nobody buy from GameStop, it's so like juvenile because they do post sale, just like the guy was saying. Like there are like it's so big that they do have people shops there, right? Hold on, let me see. You don't get $5.7 billion a year, because like nobody shopped there. Like, okay, what does this $5.7 billion say to you? Somebody's spending money there. Like $5.7 billion worth of it a year, right? So if that's the points of challenge, then it's a very small challenge to overcome, right? Since we've been fixing the balance sheets, it's not a problem anymore. And this is what the sentiment has been weighing heavily. And again, they're moving the goalposts slowly, and they're trying to prevent people from moving forward. Remember, the stock market is about forward projection of things, right? But they want you to be a year later to this company. And you'll understand why when I finish this. I keep interrupting the the video, but okay, let's move on.
In context, now they generated $5.7 billion in the last 4 quarters. If you go forward for the full year this year, they're expected to have sales around $5.5 billion, and next year, 2025, at $5.2 billion. So there's about a 4% deceleration estimate in sales. But while they're doing that, they are essentially cutting back expenses, because out of that $5.7 billion in sales that they generated, their operating loss was about $64 million, and their net loss was only about $8 million. So they're cutting expenses while sales are decelerating, but they're still positive. So the growth rate is the challenge for GameStop, not a balance sheet issue, because if we saw a balance sheet issue, which we can correlate to perhaps another one that went bankrupt, Bed Bath & Beyond, we talked about that company where it showed decelerating sales trends, but it was structurally unprofitable with a massive hole in its balance sheet with too much debt. That's not the case here for GameStop. If you look at their balance sheet, they have about $1.2 billion in cash, about $1 billion in inventory, $700 and so million in assets, including some company-owned stores and real estate. and their total liabilities, including debt and of course taxes and other forms of liability, is only about 1.8 billion. So they have a positive enterprise value. And I think that's one of the reasons why the GameStop as a stock continues to stick around. It's not necessarily as bad as one would consider comparing to other retailers that have gone bankrupt. This is a story of a stock that is shoring up its cash position, mitigating losses, but still doesn't have a plan to deal with sales decline.
You see, they're better, but well, I'll take that. But at the very least, the sentiment is kind of a little flip, right, to the bright side. But again, they should have had that sentiment a year ago, right? So the current sentiment should have been, hey, they're improving. Yes, the revenues is down 4%. You see, like the trend that they pick, and I think I kind of talked about this before, where they are, again, projection, right? Again, I get it. You have a good reason to think that we might only be making $5.5 billion this coming year, right? Fiscal year or whatever. But sorry, I lost my train of thought just now. Oh my gosh. Okay, the trend is down this way, right? And they are projecting it to be down even more. And so the trend, when they are pick and choose what data to present to you, they always present the worst case scenario, right? Which is fine. Look, to me, I feel like, okay, if the worst case scenario is just to increase in revenue, eventually they will. It just, again, it makes no sense to do that, because what's happening in the Americans' economy right now? Retail in general has been down, right? And the fact that GameStop is down by 4%, and then cutting stores to the freaking 500 store, and still come out ahead of even Best Buy. Let's do Best Buy. What's the other one that just it's like, again, compared to other retailers, GameStop is doing much, much better. Even he said it. But they have a, moving forward issue. Okay, all right, that's, again, to be seen. If you have money in the bank, you could do anything eventually, right? Right now, it's not the time to do anything. So, again, you don't even have any problem right now, right? Currently, the only thing that you have to do is surviving, which we've been doing pretty well, right? Let's say we'll continue to burn cash, $10 million a year. We still have cash to burn, right? $1 billion worth of it. And I don't project that we're going to burn any coming this next year. So if we're not going to burn anything, even if we're coming out flat, like $0 made next year, we'll still afloat, because we still have $1 billion in the bank, right? And then on top of that, you could earn some, interest from marketable security, so to speak. I think Best Buy, right? If you look at their earnings, I think I compared that before. See? 11%, 9%, 9%, 6%. So, again, consumer has been squeezed lately, this past few years. And so, what else? I think FedEx, that's the one. So FedEx, of course, we know what company it is. It's a transportation, FedEx. Fed. There we go. They just posed a loss, a trend of, transportation on shipping, customer or whatnot. But if you look at the trend and the rate of loss, see, much steeper than GameStop would be. And we did that in the face of us closing down stores. So if we have the same amount of stores, we would have overextended ourselves in that sense. And we are able to do this is because we are closing down store. With the wage wage going up right now, that was the smart thing to do. And I bet you anything that's what Ryan Cohen predicted, even when he was, the chairman. And that's why debt was his one issue. Even when we have to pay more, to buy those senior notes back. I mean, instead of having to pay them $50 million, right? We are able to earn from the money now instead of that. And so, yeah, retail has been, bailing this company out, quote unquote, but the company is is managing that money pretty well that retail has been giving to this company in order to survive this downturn. And that's what the stock market is for, is for the company to dip into that resources from retail, from whoever wants to invest in the company in order to make the company better, right? Financial turmoil. But, you see time and again, people have been screwed over by doing, CEO doing business with banks and stuff like that. And so kind of like barred retail out. So GameStop is doing something differently, right? And you have an unconventional CEO here that doesn't take crap from other people, but just there and doing the right thing and just keep doing what he's been doing correctly, even through the face of people calling him a failure, right? And so that's a good thing, in my opinion, that he doesn't talk to anyone, because again, you could be twisted. The words that he's saying to anyone, press or whatever, could be twisted. So let me see. Sorry, I'm just babbling on something. I'm looking for the highest interest expenses that we ever, as a company. Of course, this is before Ryan Cohen come in. So the biggest one that I see so far, I think I saw this before. I think around this, say $57 million, right? So we used to have to pay $57 million in interest payment, right? And see, this is why debt is it's so like ball and chain type of thing, right? It shackle you to pay for those type of thing. Because when the economic downturn comes along, the growth accelerated to the other side, meaning you lose much more, right? Even though you have a revenue of $9 billion, keep in mind that's half of what we're making right now. Well, a little bit less than half, but I mean twice, sorry. A little bit less than twice as we're making right now in terms of the yearly revenue, but yet net income is this much, right? In comparison, again, this is why, because you have to pay $57 million in interest, right? If they didn't have debt, then they would have been okay, right? There you go. That's one. And then on top of that, there's a reason for this one as well. Remember, it was a goodwill value, right? Burning the goodwill bucket out. So there you go. This is why it's such a, I guess, like FU move to pay off the debt right off the bat, because you are freeing up $50 million worth of obligation out of your balance sheets, right? Yes, you are spending money up front, but that's what retail has. You have the money to do it. Why not? Why not just pay off the credit card balance and just be free, right? Instead of stressing out using, that $300 million to do something else that might not pan out because of the economy coming in the future, right? And so people was like, oh, why did you pay off debt when debt is like cheap and all that stuff? Well, when it's cheap, right? So from what I remember, the senior notes was around $360 million, right? So if you know that, then let's see how much we have to pay in a year. 57, I'd say 56.9 divided by 300. Yeah, so what is that? That's 15%, you guys. Yeah, 15% a year. I might be doing the wrong math here, so that sounds very high. Yes, this is a trailing 12. Hold on, let me see if I do a quarter, would that change? Yeah, $9 million a quarter. Okay, so some quarters you pay more, I think. Okay, so let's trace it back. Yeah, some quarters you pay more, some quarters you pay less, right? But you always have that interest expenses that weighs you down, right? There is a time to leverage that when it is cheaper to borrow money, but if it's 15 freaking percentage, that's what kills you. That's what kills company that has money. Or that borrow money from the banks, from wherever, from people who are financing your whatever endeavor, the growth of the company or whatever, right? But retail, we need to learn how to wait patiently for this type of thing to play out, which we are at the end of it right now. You see? Okay. All right, let me try to finish up this real quick. It's only 3 more minutes, so.
George, where's the turnaround story come into play here, right? Because, okay, so that financial narrative is sustainable, it seems like, and could be worse, right? But that's not enough to get you excited about the stock. As you mentioned, it's still kind of struggling at these lower levels here. I mean, even leg warmers, I feel like, made a turnaround, right? Where does GameStop come into play?
You see that? Like, oh, they're okay. But that's not exciting enough. Like, what the hell? Again, they kind of try to underhype the whole situation when, GameStop is doing much, much better. I bet you anything, if they own this company right now at this moment in time, if the institution owns 60% of GameStop right now, they would not say that. Right? The narrative would have been different. The narrative would be, oh, they're teetering to the profitability. They're used to lose. And then again, this is how they frame their argument about anything. And again, it's very biased because somebody paid their bills, right? The people that perhaps bet against GameStop, allegedly.
Okay, so that's a good question, Ben. I can't tell you the answer to that question. Obviously, once leases, which are part of their liabilities, maybe expire, they'll start closing down some of those stores and not re-up their leases. I see a business that's probably going to still contract in terms of the size and scale of their balance sheet. But, for all we know, based upon, the institutional ownership and the insider ownership, they may end up turning the company into a holding company in some capacity because, that cash is worth a lot, and that cash could certainly be deployed. Maybe not in the sense of deploying it to expand their existing operations. Maybe it's deployed as a holding company or an investment company. I can't say if that's going to be the case, but it's certainly a consideration. But at the same time, with their existing operations, you have to think about what they could do to their current retail stores to improve revenue growth. Could they transform them into some sort of, gaming lounge place where people go to socialize? I can't say if that is what they have plans to do, but they still have infrastructure, they still have a good balance sheet. They just have to deal with the sales decline. So I'm not a turnaround expert. All I can tell you is that looking at the trend, obviously the stock is down 45% over the last year, but it's starting to find some bottoming action, not because sales are flat, they're still in decline, but their operating expenses are coming down faster and the sales are declining, and they're raising cash. So you may end up seeing a stock that does nothing, for lack of a better word, for quite some time as they try to figure out how to reconvert their business.
Yeah, George, there's some serious issues that are.
Yeah, there's some serious issues. Like they're just gonna stay flat for a while. It's just seriously like a very it's the value of the CEO. Sorry, I'm trying to imitate her. She's gonna come and interrupt it a little bit, but again, this is her spin, right? Obviously, I bet you anything she was rehearsed and all that stuff. That's fine. Again, the sentiment is like that. But what he's telling you there is actually a very good time to invest. When you are about to bottoming out or bottoming up or whatever of either the price, the sales, or whatever, you are actually seeing the first opening position that somebody should open that position too long, right? Get ready to do that. But the thing is, like, they keep saying yes, but, right? And this is very comical, so I'm gonna slow her down a bit. Okay, it's already normal. Never mind. I thought I was speeding her up. But she was just ready to jump in. So let's play that again.
How to reconvert their business.
Yeah, George, there's some serious issues that are very evident to see. You don't even have to frankly do much digging into the fund.
Oh, don't do much digging. Don't dig too much. Yeah. Don't look at the balance sheet yourself, because there's nothing to look at. Right? We already established that GameStop is not doing much better, right?
Mental story, but I do hope that maybe with some of this weakness priced in, any surprise to the upside could be perceived as a positive. We'll have to wait and see once we get those results next week, but we will leave it there. Great insight as always, George Tillis, Senior Markets Correspondent for the network.
It's so evident, right? Even when people are saying those things. Now, I appreciate this guy because this is refreshing to me, right? Yes, he's still leaning towards like a negative sentiment, but at the very least, he presented that fact. Say, okay, so they have cash, they have this and that, and this and that, right? To me, this is a little bit more honest, right, approach to covering the stock. Now, of course, I'm sure this guy is like biting his tongue on a certain thing and having to, skew it toward the negative sentiment. But everything that he's saying is actually good for the company, good for the investor, not the traders so much, because again, like he said, it might still stay flat for a while until, these people decided to buy in, right? And again, if they have time to keep shorting the company, to keep the sentiment down as long as possible, they will do it. They will do as much as they can to deliver, to either underhype the company and to try to kill that momentum, right? And on top of that, kind of steering people towards buying call options every single week, every single month. And to lose money on premiums and all that stuff. And that's why, traders usually lose money because, again, they are sentimentally very changeable very quickly. And then on top of that, the implied volatility for call option is very high. And so even if you want to bet against it or bet for it, call option, put option, you will have to pay pretty pennies for that, right? But yeah, through and through, good for a long-term investor, good for people who've been in this company for a long time, okay? And yeah, I'm excited. So overall, like I said, very refreshing to see a little bit of good news there. But again, this is this sentiment is like a year ago. This type of sentiment should have been a year ago when he was when GameStop was actually cash flow positive. But anyway, so I'm gonna go ahead and watch Moran's real quick because he was live earlier, I guess. Only 10 minutes, but let's see, you guys. Okay. Let me make sure I don't have anything to cover before that. Okay, we can cover that one. Okay, cover that one. Oh, FedEx. 7% up. Oh, FedEx was buying their own share or something like that. They lay people off, but they have money to buy their own share back. That's ridiculous, right? Okay, so Smidge. Okay, of course it's a strong buy. Okay, I think that's all I have, you guys. So yeah, enjoy GameStop. Hopefully you're as excited as everyone. I'm sure everybody is celebrating right now. But alright, that's all I have. Okay.